Banks play a crucial role in our economy, acting as intermediaries between those who have money and those who need it. At their core, banks accept deposits from individuals and businesses, providing a safe place for people to store their money. When you deposit your paycheck, for example, the bank holds on to that money, ensuring it's secure and accessible when you need it. But banks do more than just safeguard your funds. They also lend money to those who need it, whether for buying a home, starting a business, or covering unexpected expenses. When a bank gives out a loan, it doesn't just pull that money from a vault. Instead, it uses the deposits from other customers. This process is known as fractional reserve banking. Banks are required to keep a fraction of deposits on hand, but they can lend out the majority, which helps stimulate economic growth. Now, you might wonder how banks make money from this system. It's quite simple. Banks charge interest on the loans they provide, which is typically higher than the interest they pay on deposits. This difference is called the interest margin. For instance, if you earn 1% interest on your savings account, but the bank charges 4% on a mortgage, that's where they profit. This model allows banks to operate and provide services while also rewarding depositors for their trust. Another important function of banks is facilitating transactions. When you swipe your debit card or make an online payment, the bank processes that transaction, ensuring that funds are transferred securely and efficiently. This service is essential for both individuals and businesses, making everyday transactions seamless. Banks also offer various financial products, such as savings accounts, checking accounts, and investment services. A savings account typically earns interest, helping your money grow over time, while a checking account is designed for everyday spending, allowing easy access to your funds without earning much interest. Investment services can help you grow your wealth through stocks, bonds, and mutual funds, providing options for those looking to build their financial future. In addition to these services, banks play a vital role in the economy by providing credit. Credit allows consumers to make purchases they might not be able to afford up front, such as cars or homes. It also enables businesses to invest in growth, hire employees, and innovate. However, it's essential to manage credit wisely, as borrowing too much can lead to debt and financial strain. Regulation is another critical aspect of how banks operate. Governments impose rules to ensure banks remain stable and protect consumers. These regulations help prevent risky behavior that could lead to financial crises, ensuring that banks operate transparently and responsibly. For example, the Federal Reserve in the United States monitors banks to maintain the overall health of the financial system. In summary, banks are essential institutions that provide a safe place for your money, facilitate transactions, offer loans, and contribute to economic growth. Understanding how banks work can empower you to make informed financial decisions, whether you're saving for a goal, applying for a loan, or investing for the future. By grasping these concepts, you can navigate the banking world with confidence and make the most of the services available to you.